Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with TheStreet, and together we bring you the morning call. Scott, we saw some very impressive action to the upside on Friday, some nice follow through on Monday, very constructive action yesterday, and futures are flat going into trade today. This reminds me of what we saw in October of last year, that key June 4th reversal day this year. What are we looking for sustainability if this is an actual oversold bounce or a real move to the upside?
Well, that's an interesting point, because what you always want to look at the pattern and what it led to and what was the criteria for it. So you had a huge, that October 4th bottom, which was almost a year or so ago, that was drastic. June 4th, I think that's a better one to compare it to, because that was after a correction, then we resumed the uptrend. So, if we go to the chart of the S&P, you will see that first things first, this was that June 4th low you were talking about, Jill, and that what led to a nice uptrend that led to the highs here in September. So this is when that trend broke. This was actually around 1430. So if you look here at the importance of trends breaking, you could have gotten out or taken risk off at 1430 and not sat through what was a high percentage move all the way to the downside. And then, like you said, Friday, key reversal day. Let's take a closer look so you can see that Friday.
Hi,
it was very important as far as that area, okay, where we made a new low, came back above it. So your entry was right here. Here's your stop. You did have some power, so you saw appetite for stock in this area. Then yesterday, you saw some commitment to it. So I think overnight, what do we see? What were some of the headlines overnight?
Actually, there weren't many headlines to talk about. There was really no resolution with Greece. There was really no resolution in terms of a ceasefire over in Israel. So the fact that the futures are relatively flat going into trade today, that's pretty significant in my mind, because you'd expect them to be down, but the fact that the market's digesting it relatively well could set up for some good trade.
Yeah, it shows you that the bias right now could be to the upside. So
right.
What you want to do is you want to see some more commitment to it. So if we go back to the chart of the spiders or the SPX, you will see, to compare it actually to June 4th, what you saw here, okay, when we had that key reversal is you had the reversal, you had to move off it, then you saw commitment to it. You saw it hold higher. You didn't see it just fail, and then that's what led to a nice big move here. So now I would say, looking at it short term, as long as we stay above this 1382-ish, which is the 200-day, I think short term, the next move is going to be to about 1405, about 1405 maybe. Don't be as directional as, you could be. Like right now I'm pretty directional. I've been directional since this reversal. Get out of some stock right around here, and then we need to see what type of commitment you have to it. How is technology doing? How are the leaders doing? And see if it's more than just a really good tactical cash flow long.
Well, if we could talk about position management for a second, a lot of questions we've been getting on options, profits, and real money. For you, trading last week felt like it was a little bit different than it has been. Usually there's a lot of action in the open and the close, but it felt like 2 o'clock was a very key time. There's a lot of intraday volatility. How are your traders managing that? Is it any different than the way we've been following our trading plan over the course of the year?
Well, what was interesting about yesterday, which was good because the market came in, went below the 200-day, then from 2 to 4 o'clock it rallied and went positive. It showed you that some dip buyers came in that might have missed Monday or Friday. So it also tells traders that you have to be a little bit looser. You can't have such a tight stop, especially when you're trying to see commitment to a move. Maybe on Friday was different. Friday, it made a low, came back. People have been trying to just say catch the move down in the market that didn't do a level versus a level. They were probably well underwater. So with the past few days, though, you had to give it a little bit more leeway and a little bit more room, like especially to pack and fill. So the question is today, with the just say flat, do we hold around here and then do we get, a surge in the afternoon to take us up to some of those higher levels?
Right. Well, I also think on Monday when we're back together again, it's going to be really interesting to see how the 4-day weekend plays out, not only here in the U.S., but of course we have a lot of global issues that we're looking at. Speaking of the holiday weekend, Scott and I are going to take a look at some travel names in the sector spotlight. We're going to kick it off with Priceline, one of our favorite vehicles to trade, bouncing around that 5,200 DMA. From a fundamental perspective, analysts really like this name because of their acquisition strategy overseas, but in particular Kayak, which they just brought on board, which has a key U.S. market.
Right, and I think earlier I talked about Priceline too, before even coming into this segment, because it was holding up better. During the corrective process, what you want to do is you want to see where the relative strength is, and Priceline and some of these online, bookers are a good spot for it. So if you look at the chart of Priceline, which goes with your fundamental thesis, it's acting much better, and it's a place that traders turn to first in some type of bounce, because this is where the leadership has been coming from. So if you look here at the chart, you will see this was your gap up on earnings, no follow through, but there's been no follow through in the market. But you pulled in, we held above the 200-day. We still have a nice gap in place here showing you pent-up momentum. And then yesterday, I know a lot of my traders were talking about buying this thing above 630 because this is a small downtrend. So at this point, I do think this is in the game for higher prices. If you want to take more of a macro look at it, it looks like it has some room to at least get back up to the high here of 657, and then it can continue if the market's looking for leadership and the market actually gets some kind of follow-through confirmation to Friday's outside reversal.
Well, if you're looking for relative outperformers in this space, I think these online names like Priceline, Expedia are really going to be better performers than a name like a Marriott, which we're going to take a look at next. Jefferies initiated with the neutral on it yesterday, and again, one of their biggest concerns is U.S. growth slowing, and you could take it. The chart is confirming that price action.
Yeah, like you said with Priceline Expedia, I just want to show Expedia real quickly because this chart hasn't seen a pullback. This, to me, looks really good. Look at this macro trend here ever since this big gap up near the highs. You don't see many stocks near the highs. So if you're a momentum trader or an investor still in there, look to see if there's any kind of power, if the market lets anything break out, and a breakout occurs here after 60. And like what you said with the hotel stocks, they're not really acting that well. Right. Look at this. This is near the low. This is below the 200-day, below all the moving averages. If you take a more macro, look at it, I guess if you sold it well, where you had a breakout failure right there, or you also had a trend break right around here. Pretend if you're looking for some value and maybe the economy gets a bit better, you buy versus 34. But I do see you're going to see a lot of resistance coming into this 36. So I don't think this is a candidate for a trade. Maybe for a small tier fundamental buy if you believe in this name.
Well, if you take a look at HOT, Starwood Hotels, again, Jefferies initiated yesterday with a buy on it. They see opportunity in Europe and emerging markets. So you could see where the difference is who has the U.S. exposure versus the emerging market exposure, which I think is going to be really key. One of the themes that we'll take a look at in 2013.
Yeah, and I think it's going to take time to develop because a lot of people have question marks about the economy. And again, the chart's not showing you that people believe in that thesis. You look at this one, it's a bit better than Marriott, maybe because of the upgrade. If you go to the chart here, at least you have defined support here, a little bit above 50. Right there. But again, look at how this is below all the moving averages. I like to get involved in situations after a correction with stocks above the moving averages, not laggards. And in this one right here, you had a small gap up. It's trying to hold it. So if you're looking for a trade, 52-ish is your stop. If you can get above this 53 and clear this little resistance, perhaps you get a trade. But again, here's the 200-day, here are the moving averages. It's going to need a lot of power to do anything to get through those.
And if we quickly look at Wynn, this is another name where they're rewarding investors by paying them out with a special dividend. They expect up to $750 million by year end. So you might get a little bit of a bid going through the end of 2012 for that reason alone, because you have a lot of these companies, like we've seen in mega cap tech, the banks and so forth, that have so much cash on the balance sheets. They need to do something to reward investors for sticking out a really tricky Q3, Q4.
Yeah, and I know that we usually go with the gaming stocks, and I feel like I haven't spoken about Wynn, I haven't spoken about LVS, I haven't spoken about any of them in so long. So to me, right in the back of my head, it's like, okay, so I guess they're not acting very well. And if you look at Wynn as far as the chart's concerned, I guess you want to look to buy a dip. You could buy it versus this level here. I'm not seeing anything compelling technically. It's trying to, it's below the 200-day. The low here, I guess, would be 103.34. So if you're looking for some trade, if the market rotates, sorry for saying I keep saying I guess because I'm not concise about it. It could have a move back up to 112. That would be the easier portion of the move. And if we do a quick look at LVS, because the chart's not different because of a dividend, I would say right here you could hold above 42 potentially. Another trade could happen above this area, which is about 44.32. But then look at the 200-day, look at this huge resistance. To me, this has just been hard to make money, hard to find momentum. We did find that, remember that low we found, the capitulation low, had a nice move since then. It's been somewhat of a choppy mess and nothing clearly defined.
Well, I guess it's really indicative of the overall market, because favorite names of yours that you like to trade, LVS and Wynn, the fact that they've been in that unconstructive sideways action, and when you say, I guess, well, it's indicative of the rest of the market. Let's wrap it up with UAL, an airline name. I don't really take a look at these that much because they just seem pretty difficult to follow with the oil prices. I booked a flight to Chicago a couple of weeks ago for $157. A friend of mine books it a week later and got in for $330. I just don't get how that works, but there's always a trading opportunity in there.
Sometimes, and they're trades. Anyone investing in airlines they don't do so well. Exactly, and I actually just took a flight to United to Las Vegas for the trade show, and they did not have TVs. 6 hours, no entertainment. Like, what is wrong with management here? Continental used to, they took it over, but whatever. Anyway, you look at the stock here, UAL. To me, the chart doesn't show you anything. Just shows you a pretty choppy mess below the 200-day below all the moving averages. I think this is a clear-cut avoid.
Yeah, I agree there. We are going to jump into a quick commercial break, and when we come back, we dive into the trenches.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the morning call. We're going to dive into the trenches and take a look at some coffee names, which I'm sure Scott and I would love to have right now. We're going to kick it off with Starbucks, one of our favorite trading vehicles. Latest news in it is the TEA acquisition. It's about $620 million, which is relatively a blip on the radar for them. There was a little bit of noise in it yesterday with some pesticide concerns, but I really think the market's going to digest it well because, again, acquisition's a blip on the radar, but I think it can really open up some significant markets for them.
Well, this stock, I would say a quarter or so ago, it was under pressure, it got beat up. Last quarter, finally, a good number, and technically, it looks a lot better to me. Technically, I like to see a stock gap up on earnings. I like to see it go sideways, hold a portion of it to show some pent-up momentum. If you look at the chart pattern here, you'll see Starbucks, which I actually am long. You had a nice gap up. Market was weak, came back in. Here is your reversal with the market right here. So your entry for a swing trade could have been around 48 or so. Here's your stop. Here is your open gap showing that the bears couldn't just fill the gap and make this whole thing meaningless. And now it's perking back up. So I think you could be long versus area, and if the market gets better, there's no reason why it can't try and take out this resistance, which is around 52, and you take a macro look at it a little bit more longer term, and that's the resistance it's going to have to get above. But has a nice gap up. You have a new point of reference. This out of this group, I think technically looks the best.
Moving along to Green Mountain, this is one that's had a relatively tough 2012. We're looking at some of its lowest levels, but they made an announcement yesterday that a Coca-Cola executive is going to be its new CEO, so you're really going to get that operations expertise there.
Yes, and the market got excited on the open, but then it couldn't sustain it. But someone knew something here because, look at the chart here of GMCR. It's like you say, you don't need to have friends in high places. All you need to do is look at charts. And if you look here, look at the day before the announcement, right? Here is a big bar. You want to go put some volume in there, basic studies volume, to see what happened there. Look at some volume came in. A lot of people said, why is GMCR so strong? All of a sudden, they announced a new CEO. But look, if you didn't buy it on this day, you didn't find a friend on the day after the release. So anyway, someone should look into that. But besides that, now see, I guess, how high or what it could hold here. So it's sort of back in the game. I'd like to see it hold above this level. If it could show some commitment and hold above this area and go sideways, you really don't need to buy it until you see some momentum above 30 at this point. He's going to have to prove himself. You do have a nice big 8-month base here with a huge gap there. So there's a huge short interest here. If you see some commitment to this thing, it's going to take some time. You could see a nice trade, moving into the next few weeks or months even.
Moving along to Dunkin', I know we joke around about this all the time, but if this stock was judged on the heat of the coffee, this thing is going to 1,000. I don't know what they do with their water there, but in any event, from a fundamental perspective, some things that we take a look at here are the franchise model, because most of the stores, 99% of it are franchise owned. So same store sales are key numbers that we look at each month. That's why these names can be interesting to trade, because you get that ebb and flow with the volatility each month.
Yeah, and I like to get involved with these when the momentum's there. And I think 2 quarters ago, if you were on the virtual trade floor, you knew I talked about Dunkin' a lot because it had a great setup. And then since, I think the last quarter or so, it's been just drips and drabs and lethargic. I do think it has all the ingredients of a future winner, okay, but there are times to be really involved and times not to be. Andrew, did we just go down?
Yeah, kind of.
All the TVs?
Oh, there we are. Clearly, we need coffee this morning.
Let's just keep.
Half the camera went out.
So which camera's out?
Your camera. Jill's is on.
All right, and is it still taping?
Yeah.
We can edit that out. We can cut that out.
All right. What about the TV and the charts?
I don't have the.
Okay. All right, so let's just continue.
Okay.
All right, we're going to look at you this way.
This way.
So with that said, we were talking about Dunkin'. Dunkin', I think right now is just if you're in it for a macro, stay in it. There's really not a trade right there yet.
Moving along to THI. This one's an interesting name. It had to be one of these nostalgic brand identity names. It really has that market in Canada. And I think that's why it's done relatively well, because people can identify with it there. So it's kind of the first time where it doesn't trade along with the rest of the group. It has that cultural identity. and you can see it in the price action.
Yes, I think you have to bring up the chart and look at this if you're not familiar with it. And as of right now, you know Jill and I very well. Our building has been hit with a hurricane and our power just went out. So this morning call could be a little bit of a blooper reel down the road. But anyway, THI, take a look at that chart. I'm not that familiar with it, but it's also, I don't think it's showing crazy relative strength, but it's worth a look.
Well, the last 5 names, we're going to talk about some quick hits for quick cash and ones that Scott and I consistently go over. So we really don't need the charts because
Yes.
it's something that all of our traders are really involved with. First one being Apple. I personally have this on. I have a December 640, 645 call spread on. It's gotten beat up. It's come back a little bit from that explosive move on Friday. What I'm looking for here is a capture that holiday 2012 bid. I don't really know if I went crazy about it in 2013. I'm a little bit concerned about the product dependency, but this is something I'm pretty convicted in going through that December 22nd expiration cycle.
And that makes sense because technically, finally, you had the outside day on Friday, talked about it, got involved. We had long on my virtual trade force, somewhere around 520. Nice follow through on Monday. Yesterday, it gapped up, sold some. So you want to trim and trail it. I did buy it back later in the day, so it's on the virtual trade floor. I'd say as long as it holds 560, I agree with Jill's thesis that it could move up to the 600 to 610 area through the holidays, maybe into the end of the year. But then it's going to have a lot to prove there in 2013. And some people actually say it's in the midst of putting in a head and shoulders top, and the right shoulder is going to be around 610. So we'll figure it out then. But for right now, I do think you could continue to buy the dip, trade it, watch the price action, and I think we see some higher prices there.
And if we speak about Apple, we certainly have to speak about Google, because if it was gun to head and I had to pick and choose which one I wanted, if I'm going to put that kind of money in high dollar amount names, I'm really going to stick with Google because I think it doesn't have that product dependency. It has multiple business lines that it's really cornering the markets in. I did have a November 670, 680 call spread on, which expired worthless. It wasn't one of my best trades. We all have stinkers, but it's finally coming back to pricing levels I probably should have written out a little bit longer, more so with my thesis. But
I think long term it's a leader, and it just pulled back. And we were talking about where support would hold. It actually held above the 200-day, which was better than Apple per se. So at this point, it is showing some relative strength. The bounce back wasn't as big because it wasn't as stretched to the downside. But if you're looking for exposure to leaders, it just had a big 3-day move, so it could use some digestion. And I think it's something to revisit, but it definitely has some room before some bigger resistance.
Moving along to a new name that we haven't spoken about, Ameritrade, AMTD, and this is more of an overall thesis for us. I think the online brokers are certainly going to see some action in Q1, Q2 of January 2013. Once we get some resolution language with the fiscal cliff, the retail market is definitely, the retail trader is definitely going to come back to the market. There's a lot of cash on the sidelines. Monthly metrics from these brokers indicate that average daily trades are down, but asset balances are way up, and that's all that cash that's ready to get infused into the market. I think out of the three, Schwab, E-Trade, and Ameritrade from a fundamental perspective looks the best on a multiple basis, margins, and it has a 2.3% dividend yield. So I'm looking at that as maybe, deep value play here.
All right, deep, and I do some work more with Schwab, so I can't say that I like Ameritrade the best, but I think Schwab is definitely trying to be innovative. They're trying to service their clients. I know that, again, retail's been out of the market, volume's been down, the stock has been depressed, so I think you can look at all the different names. They're all pretty similar. Just go with the name that you want and that you're a little bit more familiar with, and I think Ameritrade's good. I think Schwab is worth a look as well.
Moving along to TJ Maxx, this has really been a relative outperformer for 2012. I currently have a December 42.5, 45 call spread on. It's in the money. It's looking pretty good here. And again, for my same thesis that I have with Apple, I'm looking for that holiday 2012 bid.
Okay, I think this one's been showing relative strength. I would go with Jill's strategy there, and and make sure that the relative strength stays there.
Okay, and we're going to wrap it up with one of my favorite names, IBM. This is one of my favorite core portfolio holdings. It's cornered that analytics and services market. It's about 80% of their balance sheet. And if you look at a name like an HPQ, who never got out of hardware, and IBM did 10 years ago, enough said.
Yeah, I just think it's in the penalty box. After the earnings, nobody was even interested in it. Didn't fill the gap. And I know I mentioned it like 2 weeks ago or whatever it was. It was actually one of the reasons why I went back to tactical versus portfolio approach. It was the week of when Google was halted, and it lost. It had a gap down, no interest, broke the 200-day. There was no support. So for me, I think that it's got a lot to prove. I think it's right around, 188-ish?
Right. Yeah, well, the strategy I'm looking at is I have a time spread on, and $200 is the target that I have into December, which I think we're definitely going to get to. And again, it's one of those things where, I'm long at my portfolio, and I'm fine with that. Like,
Okay.
That's just something that you'll hold forever. So. On that note, from our trading family at T3 and The Street, happy Thanksgiving. Have a fantastic holiday weekend, and hopefully we'll have charts at the end of the day. You can catch Scott
Yes.
as he wraps up the market for us on Real Money Pro, Options Profits, and T3Live.com.
Have a great holiday.